In this video, I'm going to share a simple trading strategy that I use on a day-to-day basis, which has helped me pass my prop firm challenges and get to 100k funding by now. I know it's not a lot for some of you, but for me as someone who lost consistently for 3 years straight, was able to turn things around in just 6 months of using this strategy. So today I'll walk you through on a step-by-step process on how you can use this strategy and potentially replicate the same success as me. For those of you who stick to the end of this video, we will also take a live trade using the same strategy that we learned in this video to see how powerful they are. So without wasting any time, let's get right into it. So if you have seen my trading plan video where I said that there are 4 specific things we look for in any trading strategy. Number 1, it is the conditions. Number 2, it is the entries, then stops, targets, and the risk management as well. So first, let's start with the conditions of this strategy. First of all, the markets should be trending only. We only want to get involved in trades where the markets are trending and not when the markets are consolidating, because there are very high probability chances of you getting stopped out since there is very less volume in the charts. So if the markets are trending, then only will we move on to step number 2, which is we need to find our daily or 4-hourly levels. To find our daily or 4-hourly levels, you can use supply and demand or support and resistance, whatever it is. But our strategy consists of drawing our levels in the higher time frame, which is the daily and the 4-hourly. Once the above 2 conditions are met, then only we move on to step number 3, which is that we must have rejections in the 4-hourly in those levels. The rejection should be in the 4-hourly only. If you get rejections in the 1-hourly, they won't be as strong as the 4-hourly rejections. So once these 2 steps are met, we are looking for our rejection in the 4-hourly only. If this does not happen, then the trade is invalid and we move on. Over here, the markets are in a tight range from the highs to the lows, and the markets are just moving up and down, and there is very low volume on the charts, and there's a very highly likelihood of fake outs. As you can see, most of the times what people will do is that they will think, all right, we have a demand zone over here, price will go up, we'll take a buy over here, and as you can see, they got stopped out. Then again, the market moves back up, again down. So these conditions are low probability conditions, and there is a very highly likelihood of you getting stopped out. So we don't want to get involved in conditions like this. But if you see on the right over here, this is what we call high probability conditions. Why? Because the market is trending. What is a trend? A trend is where we get a series of higher highs and higher lows in an uptrend. And in a downtrend, as in this case, we are getting a series of lower lows and lower highs, as you can see over here. I have also marked it out on the charts. This is our lower low. This is our lower high. Another lower low, lower high, lower low. So we are in a trending market, which is moving towards the downside. And then our next step is to find our 4-hourly or daily levels. As I came to this chart, the very exact level or the very most obvious level that I found was this supply zone. As you can see over here, this supply zone had also done this market structure breakout, so it's a strong level, and I had this supply zone marked out. And then our third step, since our both the steps are met, our third step is waiting for the 4-hourly rejection. Until and unless we get the 4-hourly rejections, we won't get involved in the charts. And if you see over here, we had this supply zone and the markets started rejecting 1, 2, 3, and then we came down. So all our conditions are met, and now we can look for entries. Now that all our conditions are met, we move on to step number 2 of any strategy, which is the entries. For entries, I don't use any complicated stuff like order blocks or fair value gaps. Instead, I use a very mechanical way to enter into trades, and that is I use consolidation breakouts, and to be more specific, I use consolidation breakouts in the 1-hourly. So after we get rejections in the 4-hourly from the daily or 4-hourly supply and demand zones, then I scale down to the 1-hourly to look for consolidation breakouts. For my stop placement, I put my stop loss above or below the structure. So if this is our consolidation, we get this breakout, then our stop loss will be above this structure. Now, structure sometimes is very high. If we are, let's say, entering into a downtrend, structure can be very high in the 1 hourly. So if the structure is very high in the 1 hourly, which messes with your risk reward ratio, then you can scale down to your 15 minutes to find a better structure and a better stop loss so that your risk reward ratio is maintained. But don't go to the 15 minutes every now and then if you have a clear structure that is within your stop placement range in the 1 hour. And now that your stops are placed, for targets, you can use a strict 2 RR rule. With experience, you can probably increase it to 2.5 or 3 RR, like sometimes I do. But in the beginning, I would recommend you to go with 2 RR only. And once you find consistency with 2R, then you can experiment with bigger risk reward ratios. Alright, so going back to the same example that we saw a few minutes ago, price came to our supply zone and it also had this 4 hourly rejections, which meets all of our conditions. And then for our entries, as we said, we'll go down to the 1 hourly. So we scaled down to the 1 hourly, and as you can see, price was in this supply zone. And then what we wait in the 1 hourly is for a consolidation breakout. What we can see over here is that after price taps this supply zone, price starts to consolidate in a tight range for 8 to 10 hours, as you can see over here. And then we got the breakout. Like we said, our entry will be at the breakout. So as soon as this candle breaks out of this consolidation, we enter the trade. And our stop placement, as I said, will be above or below the structure. Since the 1 hourly structure was very near and I only had around 15 to 20 pips of stop loss, it was completely acceptable. So I placed my stop loss above this wick, and my target on this one was 2.5 RR since we had lots of fair value gaps to be filled. Again, this is an advanced concept. You can start with 2 RR and with experience you can target higher risk reward ratios. But I got out of this trade at 2.5 RR and the market still continued to go all the way towards the downside. And the lowest it went was towards 10 RR. So it was a nice trade. As you can see, entries after the consolidation breakouts, stop above the 1 hourly structure, targets 2 hourly, we ain't being greedy, and that's it. So we just entered for shorts in gold using the same strategy that we discussed in this video. First of all, if we go to the 4 hourly time frame, I had this beautiful supply zone over here, and it is even more clear in the daily time frame. If you have a look, this supply zone looks very good, and price exactly comes to this supply zone with this wick and rejects in the daily time frame. And then I scaled down to the 4 hourly time frame where I saw these beautiful wick rejections. If you can see over here, what these wick rejections tell us is that money is going out of the market and there is a chance for retracement before the market moves back up again, because in the 4 hourly overall we are in an uptrend. And after this rejection, I scaled down to the 1 hourly time frame where I saw this beautiful consolidation over here, and I entered right after the break of the consolidation with my stops above this high for 60 pips, and I'm targeting 2.5 RR on this trade for the markets to come back to this key level before going back up. And we also have lots of imbalance to fill towards the downside, but the main entry pattern over here was consolidation break, and in the 4 hourly we were at a supply zone. So we entered this trade, and I will update you guys on how this trade turns out to be. This is an update on the trade we took in gold yesterday using this strategy, and price immediately fell towards the downside after we entered this trade with zero drawdown, and even our exit was pretty perfect as well, since price hits our take profit at 2.5 RR and immediately goes back towards the upside. This retracement would have taken us to 0.8 RR before price fell towards the downside, so our exit was pretty nice as well. I executed this trade live in front of you to show you how powerful this strategy is. Now it's on you on how you use this strategy in your arsenal. Now that you have learned the strategy and also saw the live trade we profited from, still, how do you believe that this strategy actually works? Because for the sake of this video, I might take a winning trade and completely eliminate all the losing ones. If you thought this way, then you're completely right. because the internet is filled with false claims and bold promises. But to prove you my point, I documented the phase 1 of a 50k challenge using the same strategy a month ago. We took 5 trades and won 4 of them, which is a win rate of 80% using this strategy, and I was able to pass this account in just 1 month completely live. So if you want to see the documentary series of my 50k challenge and gain a better understanding of the strategy, then check out this playlist of mine. I'll catch you guys in there. Till then, take care. Bye-bye.